Now it's urgent. Now it's like, oh, well, now we need to be as competitive as possible, when 2 weeks ago they could have had the property with no competition at all. You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren. Hello, and welcome back to the Ottawa Real Estate Podcast. My name is Paul Stevenson, and I'm joined as always by David Warren. We are both level 2 mortgage agents. We're born and raised in Ottawa. We're here to bring you the skinny on Canadian real estate. And we just want to give a quick thank you to our amazing sponsors, Gertin Poirier Avocat Lawyers, Big Insurance in Westboro, and Centum. Thank you all for your support, and thank you for listening. If you're listening right now, new episodes come out every Wednesday, 10 a.m., and you can find us on all of your streaming platforms, as well as on YouTube for the video. David, how are you doing? What's going on? You're in sunny Florida. You're in the Sunshine State. I think that's California.
No, that's Florida.
No, it is? Yeah, Florida?
Yeah.
Look at that. Look at me.
Yeah, just working from here for the week. Went to, finally got to a Blue Jays spring training game this past weekend.
Yeah, that's cool.
Massive baseball fan, and I haven't gotten to one before. It's me and a close friend of ours had plans to go in 2020, and then COVID shut all that down. So finally got to one, and then you and I are meeting up tomorrow to head to the home opener, actually.
Home opener. Yep. Huge Jays fan. You know me. Love baseball. But the pictures are great. And I think for your son too, great experience. You guys were, right tight up there, and being that close to the players, especially in warm weather, must be pretty nice at this time of year. We had that great snowfall yesterday, which was a nice surprise for everyone after the 20-degree weather we had last week.
I was very fortunate to skip that.
Yeah, and you guys, Jays are starting the season, and we were talking about CP. CP's 3-0 right now in the playoffs, leading the series 3-0 against Kemptville. So hoping to clean it up tonight, finish it out, sweep. We got the brooms out, and we're ready to rock. So
Big Jax is going to have a big game.
Yeah, he's playing well. They're all playing really well. They're heating up. So you know what else is heating up, David?
Not the real estate market.
Yeah. So what are you seeing right now? Like, what's the last week here? What's the last week been like? What are you seeing on your plate?
It's very contradictory. We've talked about a lot of inventory on the market, but I have gotten a couple of purchase agreements over the weekend where people were in multiple offers, and others, speaking with another realtor who, mutual clients that they've lost out on a number of multiple offers. But then it's also been very kind of calm, so to speak. It's kind of weird. There's activity on certain properties in certain locations. It's kind of the same old trend. But by and large, the number of purchases is really down. And when I speak to mortgage agents, across the city, really, the bulk of what they're dealing with is renewals, refinances, and that's the bulk of their book. And I was trying to find the stat this morning, but it was, talking exactly about that, of the market being down for purchases, but the actual mortgage volume and transactional mortgage volume being up dramatically from last year. But yeah, I mean, how about yourself? Are you kind of seeing the same?
Yeah, I was actually just bringing up my kind of deal org chart here to see, because, of my active files, probably I'm looking now, maybe 40% are purchases. The other 60 are switches, refinance, renewals, etc. So, a lot of existing clients that are, lots of discussions happening, and a lot of people, honestly, a lot of people pre-approved, a lot of people shopping, but I think everyone's still looking for that deal. Like, I was just talking to an agent before we came on here. Clients had an opportunity to go see a property off market 2 weeks ago before it was listed. They were thinking that if it just hits the market, it'll sit for a few weeks and then they'll get it at a lower price than what it was listed at. They've gone to see it, they love it, and now there's another offer. So now they're deciding, okay, well, the deal's off the table now. What do we do? Do we go in at asking? Do we go in slightly over? Obviously asking about conditions, financing conditions, etc., which, case by case, but I'm certainly, I've in 13 years, I think I've told one client that they cannot put a condition for financing, and it was, an extreme case where they needed 15% of purchase price, and it was like a no-brainer. But in most cases, like, especially in today's market, I don't think you need to not put in a condition for financing. But in this case, they're like adamant, like, oh, now it's urgent. Now it's like, oh, well, now we need to be as competitive as possible. When 2 weeks ago, they could have had the property with no competition at all, So this happens every spring. So it is, like you said, there's a lot of homes that are sitting. I think the days on market when we last looked in February were 19. I'm thinking that's probably going to go up again. It was at 42. I thought it was going to be under 30. It went to 19, which was wild. But I think we're probably going to sit in that, 25 to 30 day mark now, moving into April. But all this to say, like, the properties that are attractive, it's been on the market for 5 days and now is going to have multiple offers as of 10 o'clock this morning. So yeah, it's an interesting market. A lot of people shopping, but most of my conversations, as yours, are refinances, restructuring their mortgage, and in some cases, I have those clients that I'm talking about. They're putting that offer and are actually refinancing, converting their current property to rental, and then buying something new. So yeah, a lot of unique things. Like, we're seeing a lot of unique conversations happening right now on my side.
Yeah, I think before, a few months ago, people waiting to see where the Bank of Canada went, where Bank Prime went, where fixed rates went, before kind of jumping on anything, and kind of just seeing where that, where things kind of trended as far as rates, and waiting for those lower rates before getting in the market. Now I think there's uncertainty and trepidation just with, continued tariff issues and talk. Again, it's supposed to be back on April 2nd. So next week, who knows? This is always just the uncertainty. Obviously, we see it in the equities market. I think it was something like $3 trillion has been taken off the equities market in the last few weeks because of Trump's tariff war talk. And so that obviously hits people. We talked about last episode, that hits obviously people's savings that they're using for down payment, things like that. So that, puts pause. And then we've got a snap election that was called on Sunday,
right,
for the end of April, where, there's a lot of, anytime there's an election, there's a lot of talk of what the new budget's going to look like, what the incentive is going to be for people to vote. And, obviously this one is seemingly, an even more important election than any that I can remember, just in the sense of, we've got a new party leader for the Liberal in Mark Carney, who hasn't been an MP before. We were talking off air. He stepped into the Ottawa Nepean riding. And so that'll be interesting to see whether, how that shakes out within Ottawa, because you've got Polyev, who's from Ottawa as well, running here. Yeah, I mean, really kind of with this and where we're at with, the tariff talk, distracting people, and uncertainty around that, and people's budgets being strained, and the unaffordability and housing. There's a lot of different areas in which people are concerned. It's not just one focus. The last election was focused just around COVID and what the economy did. Now it's, more broader based with inflation, with tariffs, with, kind of how do we control Trump, so to speak, and kind of keep things Canadian? How do we address unaffordability in housing? How do we afford social services and address that? We've got a budget deficit. So there's all these different areas. And I think, there's going to be pause from home buyers waiting to see what rolls out from these pledges and those budgets from the two party leaders. And really it's a 2-horse race in Polyev and Carney. This morning, we're recording on Tuesday morning, even just now, Polyev, kind of, it's almost like they're one-upping each other a little bit,
of course,
which is kind of funny. But Polyev announcing that anything under 1.3 million is a new home purchase, they will waive the Conservatives are pledging to waive the GST, which would save home buyers around $65,000 on that purchase. And then Mark Carney with the Liberals pledging that anything under $1 million for first-time home buyers, they would waive the GST, which is roughly around $50,000 in savings. So it's kind of, jockeying a little bit. There's the lower tax bracket for households, where the Liberals are saying they would reduce it by 1% for personal income tax, down to 14%, and the Conservatives saying they would drop it by 2.25%. So it's, I think really, I say all this without kind of getting into the articles, but I think there's going to be a lot of pause from home buyers and not only just first-time home buyers, but also second, third, fourth time home buyers, to wait to see what these changes are, because if, let's say these GST pledges are translated not just to first-time home buyers, but also to, to second and third time, well, maybe then that's going to drive the new housing market and pull away from the resale market. There's a lot of factors that I think people will pause to wait to see how it's going to impact.
Yeah, I agree. I think the kind of spring market is going to become the summer market. Now that at least we know, I think it's April 26th, 28th. I can't remember the exact date of the vote.
End of April.
End of April. Yeah, good. So end of April, that leads into May, June. So I think even after the election, the dust is going to have to settle. I don't know the exact turnover as far as how long it takes to transition leadership, if that happens, or if Carney stays in power, if that just, nothing changes come May. So it'll be very interesting. Next few months are going to be interesting. We've been kind of waiting on this. This was all expected. We thought that this might be called even in January, February. We've kind of been waiting on this on the dominoes to start falling. So now we're here, and in a few weeks we're going to have the long-awaited election. So that'll be very interesting to see how that plays out.
Yeah, I think I'd be surprised if they, kind of relating to the housing market, because that's obviously what we're focused on. I think the numbers are still going to be significantly down through March and through April for home sales. But I think banks are still going to be aggressive on rates. We've seen this past week a lot of the banks drop to, 5 to their fixed rates being having a 3 in front of them now. 3.99 for some of them on the 3 and 5 year fixed. So I think they're going to continue and have to be aggressive to win any business on the the small amount of purchases that are going on across Canada, but more so because of the renewals that are coming up, and they're needing to put a focus on those, and then the sheer volume of renewals and maintaining that turnover of clients is going to be paramount to these banks. What people don't realize is it's just like any sort of acquisition or sales cost for any business, but it's more costly for acquiring a new customer than it is to retain an existing. And so it's the same as in the mortgage market. It's very costly for them to acquire a new client for these banks because of underwriting costs and systems costs and overhead to who they're paying to facilitate that mortgage and all these different steps and compliance and this, that. Whereas on a renewal, they're not paying out anything, and it's simply just a renewal. There's not the same hard dollar costs or operational costs there, and so they're going to be super aggressive on that side of things. So I think they're going to have to keep pushing the rates down. Mm-hmm. There's still going to be a rate war between the banks in that sense, but I don't think it's going to parlay or pick up the housing market like we thought it might in December.
I completely agree. I think, if you're up for renewal, I think this works in your favor because, even given the lower sales, it almost makes lenders even more aggressive because they need to get that net out and acquire some new clients, because this is kind of their time of year where they would grow that book, and investors and so on, everyone kind of has that expectation of that increased growth. So I think the rates, like you said, it's even though there's not that much activity on the purchase side, there's a lot of maneuvering, kind of a race to the bottom to see who can have that best fixed rate to get people in. And we have seen even on transfers, there's some lenders that previously on transfers, you might get a slightly higher rate, kind of low to mid 4s. There's some lenders now on transfers, on renewal, that if you switch lenders, you can get in that, high 3s, very low 4s. So that's good to see. And I think for people that are expecting that, $500-$600 payment increase every month, that can probably be tempered down to, maybe $150, $250, something like that. So a little more manageable than it was a year ago when rates were at, 5.74 or 5.79, that sort of thing.
Speaking of renewals and transfers and incentives for borrowers, something that I found out this morning, actually, that I want to actually caution people against. A lot of people, when they're up for renewal or a midterm, they're looking for that incentive to switch banks. Are they going to provide me some cash, or are they going to cover this or that? Banks in general, they're not going to cover your penalty. Breaking, if you're breaking midterm, there are, I think we talked before, there are strategies, you can do a cashback mortgage, things like that. But a lot of people are focused heavily on not just rate, but also these cash incentives. What are they going to give me what are they going to line my pockets with to come over? And something that people need to be aware of is to read the fine print on those. There's one bank in particular that I came across this morning that even if you take a 3-year fixed and you get you take advantage of their cash incentive to go over to them. This is not a cashback mortgage. This is just you get a mortgage with them. Your payments come from that bank. You don't have to bank with them, but at least the mortgage payment's coming from them. Even if you take a 3-year fixed mortgage, they're going to give you an incentive. Let's call it $3,100. But if you leave them at that 3-year maturity mark, which is your mortgage is only a 3-year fix and your maturity is up then. But if you leave prior to 5 years, you will have to repay a prorated amount of that cash incentive. There is fine print to it, and that's not all banks. That's not all the banks, and that's mostly the major banks that have some of these cash incentives or cash offers. But that's one that I came across this morning that I was very surprised at, where the client's taking a 3-year fixed. Not one of my clients, but they're taking a 3-year fixed. They're getting a cash incentive of $3,100, but they're having to sign documentation that they understand that if they leave after 3 years prior to the 5-year mark, they're going to have to pay back, 2/5 of that cash incentive. Something to be cautious of for those of you that are renewing and coming up is to ask about those. If you're looking to get cash in your pocket, that incentive, just make sure to ask the questions of it. Is there any, strings attached? Or is it just my payment has to come from that bank account?
Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Geltin Poirier Avocat Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at geltinpoirierlaw.ca. Let's get to the heart of your deal. Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big. Protect what matters most.
Yeah, and that bank is, strategically, that's a smart move, because if someone takes a 3-year, you're essentially going to get them for 2 full terms. So if they take a 5-year next time in 3 years, you're essentially getting 8 years for that cashback amount, which they're more than going to make up in interest. I saw an article here that I wanted to pull up. So this is an article from Canadian Mortgage Trends. It says, mortgage market braces for impact as 1 million renewals loom and defaults climb. It says Canada's mortgage market is rebounding with new originations up 39% year over year, according to Equifax's latest Q4 Consumer Trends report. What I found interesting in here, Dave, was we were just talking about the increased payments. So it says here, mortgage market recovery slowed by rising affordability pressures. Ontario and British Columbia in particular are seeing delinquency rates reach new highs as homeowners struggle to keep up with rising payments. In Q4, more than 10% of renewals in both provinces saw average monthly payment increases of $500 or more, putting additional financial strain on borrowers already managing high mortgage balances. So this is Q4, so this is obviously end of 2024. So leading into 2025 with the rates continuing to drop, that's why I'm saying that 500 is probably going to be closer to maybe 300, 250, somewhere in that range. But it shows here new originations and mortgage renewals. So mortgage renewals where payment went up over $500 in 2024. In Ontario, 10.2%. BC was 10.9%, and then all the other provinces are below 7%. So anyone who's watching this, you'll be able to see this. And then it shows average payment increase if it was over 500. So in Ontario, average payment increase was $1,184 for people that were over $500. So that's a pretty substantial. No matter what, even if you're pulling in, $10,000 a month as a household, that before tax, that's 11% of your gross income just on that increase.
Yeah, I mean, even looking at that last line item of across Canada average of 1152 across Canada for increase, and some of those, and the interesting thing in that is that some of the provinces you wouldn't expect of where the average payment increase is. So PEI is only 3.7% of mortgages on renewal that are over. Payments went up by over 400, but the average payment increase is $1,276, which is higher than Ontario. So that's pretty interesting, I think.
I thought that was pretty neat. So anyone, if you're listening, I would go check out the YouTube video and just check out these numbers here. Dave, we were talking before we came on air too about the increase that we've seen in people asking about vendor takebacks. Did you want to touch on that quickly?
Yeah, for sure. I mean, it's certainly something in a market where properties are sitting, like we're seeing with some, and I think the numbers in February were 4.6 months or 4.8 months of inventory on market. And those are properties that obviously are not, maybe priced right or staged or whatever maybe, or needing some renos. But what ends up happening in a lot of markets where things are stagnant and people are needing to or wanting to sell, the kind of the conversation around vendor take-back mortgages comes up. And for those that don't know, a lot of people throw this term around, a VTB, or vendor take-back mortgage. They don't really know how it can impact things. Effectively, it's where a homeowner, typically the existing homeowner is looking to sell their property, and they don't actually have a mortgage on it, but they're looking to offload it. It's, in most cases, it's a rental property that they're looking at offloading. They just don't want to be a landlord anymore, or whatever it may be. But the buyer doesn't maybe qualify, under conventional for the full amount that they would necessarily need. They would have a, portion of the down payment, that 20%, let's say, but they don't have the, maybe they only, a $1 million mortgage. Let's just use that for easy math. They have the $200,000 for down payment, but they maybe only qualify for $600,000 with a traditional bank because maybe they're self-employed and they don't claim enough income, or whatever it may be, or they're between jobs, or whatever the reason is. And so sometimes you could have a position, a vendor take-back mortgage, where the seller will lend that buyer that delta, $200,000, let's say in this example, and register it as a second mortgage on the property at a specific interest rate. One thing that's need to be cautioned of is that major banks do not permit for a second mortgage to go behind them on closing. This is something that needs to be disclosed. There's cases where they might allow it because it's a very strong borrower, maybe from net worth or whatever it may be, but it is something where not all banks will permit it. A lot of the alternative lenders will be more comfortable with it, but it's something that we need to disclose up front. But that said, there is times in which it can be strategically used. I've used it a few times, with clients and helped them direct it, where the full mortgage is a vendor take back. So the seller is actually holding the entire mortgage at an interest rate that is advantageous to them. Maybe it's, a point or two above where the, major banks might be. And, in one case, the buyer only paying, half of what the mortgage payment would be. And they're, ballooning the payment, meaning at the maturity date that's set out, the end of the term, that they're, back paying that interest that's owing, things like that. So it's strategic financing in that sense, where it benefits both. The seller is able to sell that property, get a little bit of cash in their jeans now. They're not having to pay taxes on everything because they haven't, realized that gain fully. But they're also making interest that they wouldn't on that money where they wouldn't have necessarily made it, and they're not having to be a landlord in a lot of cases. And that's where I say it's mostly on rentals that this happens. But then at the end of that 5 years, the buyer, the now owner, is then refinancing to pay out that balloon or paying it from savings or whatever it may be. So it's something where we don't see it too often on residential because it is trickier to find a lender that is going to be okay with it. But we do see it more on the commercial and multi-residential side, where the bank might not finance the amount that is needed because there's a restriction of down payment by that buyers. It's something that does come up, like I said, and it's coming up more and more with just with the properties being stagnant. Like I said, that's where people really start to get creative in their financing of, how do we unload this property? How can we make it advantageous to the new buyer? But, they want to offload the risk and responsibility of that property.
That was a fantastic summary, David. Way to carry the team there. That's great. So yeah, any questions about VTBs at all? Obviously, you can reach out to David or I at any point if that's something that you've heard of, or someone suggests you. Like, we're happy to kind of take a deeper dive into it. We'll delve into it for you, with you. Dave, how do you feel about sliding into mood boosts? Are we there? Are we at that point? Anything else you want to cover?
I think so. Not really. No.
You got.
I think we should wrap it up.
You got a pool to get to.
I got emails to get to.
All right, I got 3 today. I like them all, but I'm my gauge is sometimes off. Yeah, I'm a little biased. Number 1, what rock group have 4 men that don't sing? Mount Rushmore. 4 rocks. Number 2, why is a river rich? Well, because it has banks on both sides. Yep. And last but not least, how do 2 arsonists hook up? A match on Tinder.
Oh, wow. That's a good one. Yeah,
I like that one too.
That's how much of a thinker. That's almost why. That's why the thinkers kind of put a little pause in it. That one's a good one.
That's a good one.
Yeah, I like the idiot proof ones.
Thank you, everyone, for tuning in. I just want to say, go Canadians, go Jays. Huge Jays fan. Love the Jays. And thank you, everyone, for tuning in. 10 a.m. every Wednesday, new episodes. Thanks, as always, to our amazing sponsors, Gerté Poirier, Avocat Lawyers, Big Insurance in Westboro, and Centum. And David, thank you. All right, we'll see you next week, everyone. Deuces.